right, so welcome to Wall Street, Jackboyz, Game Plan Sunday. Today is August 4, 2019. We got a lot to cover. As you guys already know, we're going to cover what happened over the past week. We'll take a look at what's coming here in the near future and how we can use all that information so we can make some money here in the markets. There was quite a lot of things that happened over the week. A lot of information that was, passing through the markets and the economy. We'll start with the Feds because that was the biggest. That was the first thing was the Feds came out and the Feds cut interest rates. So it's been years since they cut interest rates. And this is basically starting a new era, even though Jerome Powell claimed that he's not going to say that because, again, you got to keep the status quo. But once they start cutting rates, it don't stop. OK, and I'll show you guys the charts here in a few moments on that. But that was the major event that happened this week. So, again, I tell you guys, when there's major events, make sure you take your profits and your trades before those events come because they're kind of binary at the end of the day. You can lose it all or whatever. Like, it's crazy. So make sure you get in your trades and out of them before those major events. When the Feds talk, you better listen because that makes the money move. So we don't know what direction it's going to move, but it is going to move. And so it's just best to stay out of danger, stay out of that, unnecessary risk. When the Feds speak, make sure that, for me, this is what I tell my students is, hey, get out of your positions before that happens. Get your bag and get up out of there. And then you jump back in, live to fight for another day. OK, so the markets already had it priced in. There was going to be a, quarter basis point cut on the interest rate. So we were already anticipating that. But the markets wanted more. The markets wanted a 50-point cut, not 25. Right. So the funny thing is that I watched the actual interview. Did any of you guys watch the interview? Did y'all see the hearing with Jay Powell? I don't know if you did. If you did, hit the thumbs up. It was real interesting. You guys know it's kind of like politics. You can't say certain things. They got to word things certain way because they don't want to create other issues. And so they got to be very careful on how they word the information that they got to relate to the public. Now, behind the scenes is a different case, because everybody that's at the top of the Fed, they all had their meetings. And there was two people that voted against the rate cuts this time around, which was, again, they shouldn't be cutting interest rates, to be honest. If the economy is great as they say it is, it should be raising it, right? So it's like, hey, American economy is doing so great. Why are y'all cutting rates? And these are some of the questions that Powell was getting during the interview. Now, the markets was moving. As you guys know, if you're in our chat group, if you're in our group on Facebook, which is free, Wall Street Jackboyz. If you're not, make sure you join. It's free. You just got to fill out the questionnaire because we get hit with so much spam. It's the only way I can know that you're a real human. So make sure you fill out every question before you join the group. It's on Facebook. It's Wall Street Jackboyz. And we'll get you in there so you can see what we're doing, what we're trading. Anyway, it's free for everybody. So anyhow, we posted in the group while the Feds were speaking how the markets were reacting. And you can see how the money moves when the Feds start to talking. You got to guard your positions. Hopefully you don't have them on while they're talking because it can go either way. But basically, Jay Powell was basically saying that, hey, this is not a start of a new cycle. That's what he kind of wanted to say. It's a one-time deal kind of thing, even though he didn't say. He came back and corrected himself. Said, well, I'm not saying it's a one-time deal, but I'm just not basically going to jump the gun and say that this is a new cycle, even though it is a new cycle, because we're going to look at the data. I'll show you guys the charts and you'll see how this is going to have to end. OK, so that was the first piece of information that was major over the week was the Feds cutting rates. OK, now, why would the Feds be cutting rates if the economy is pumping? OK, the Feds cut rates to get spenders to spend more money. Feds cut rates. It influences you all the way from the banks, all the way to the customers, the consumers, which are you and I, us, right? Low man on the totem poles. The whole game is to get you to spend more money. But it's like, why? So the Feds have an issue with inflation. Inflation is dead. OK, the way that they gauge inflation, they're basically not hitting their target. They got this 2% target and they're trying to do everything they can to hit it. Now, they got so many data sets that they use for inflation. You got the PCE, the CPI, what have you. But normally they use a CPI, right? And so they haven't been able to hit that 2% target. So it's like, hey, we can get people to spend more money, right? Still more slack in the economy. But really, they exclude food and energy. OK, I mean, think about food and energy. People's, your energy, spending way too much money on your light bills and everything else. Your energy is costing too much already. All right. And then food is extremely high right now. Okay. So the inflation is there. And so by the time they do this, they're going to pretty much cook the economy. This is going to be a Fed policy mishap. Okay. So again, we're already talking about a recession that's on the way because of the yield curves. We're going to take a look at all of that, show you guys what we're talking about. But basically, there's a recession that's on the way. And so anyhow, with the Feds doing what they had to do with the cutting the rates, we already knew that. But the markets wasn't happy with it. And so the markets began to sell off because it's like, hey, what is this quarter point going to do to help, get the economy pumping? The money that people are spending isn't cash, it's debt. So, and that was also a concern of the IMF, the International Monetary Fund. Okay. The IMF said, again, they give recommendations to the Feds, and they're saying the same thing, that, hey, people are debt burdened right now. So are you going to give them more debt? Because that's what they do. And they cut rates that puts more credit in the system. Credit spends like cash. Remember that. Everybody driving a fancy car with a nice house, they're not buying it cash. They're getting a mortgage or they're getting a loan on the car. So just remember that. They need you to keep on playing the game, spending. You got your holidays. They're created so you can spend. Remember, 70% of our economy is based off of you spending money. GDP. We just had those numbers come out the week before, which, slows, we're dropping. The economy's slowing down. They already see that. But it did a little better than what they were anticipating. So that's why we had a rally last week. We had those the week before we had those new highs. This week we had the Feds cut rates. Markets wasn't feeling because they said that's not enough to stimulate the economy, B. It's not going to work. Boom. They start selling off. Bonds start rallying, right? But then the next day was a jump back. It was like, oh, we back in the game. And because, again, we had the job numbers that came out. We had the job numbers that came out on Friday. So, okay, so this was Wednesday when the Feds did it. So Thursday we had a jump back. Yeah, so Thursday was a jump back. So everybody was like, oh, it's going back up. And then we had Trump. That's what it was. Yeah. Trump tweeted. Trump tweeted and messed up your whole world. Okay. Trump tweeted about this whole ordeal about taxing more tariffs on China. China, a whole extra 10% on an additional $300 billion worth of goods. And the markets just wasn't having it. Okay. The markets went slam to hell because, again, a lot of the tariffs that's been on there, consumers have not been hit with that. Okay. So you got to remember it's both ways. When Trump is throwing tariffs on those Chinese goods, you got to remember who's China selling this shit to. They selling to us. So it comes back to the American people. So that's when you hear people say it's a tax on the American people. That's what it is. Okay. It is a tax on the American people. But all the tariffs that he was throwing on before now, right? The other 25% before it was like on raw materials, right? So corporations, they got to, take the brunt of that. This time around, next month, September 1st, Trump got fed up. So first of all, Trump already announced he was displeased with the Feds. It's like, he's been talking about this for the longest. It's like, man, y'all gave Obama 0%, right? I could do so much with this economy if y'all can give me that 0%, right? Everybody around the whole world got 0% and negative interest rates. And here we are at 2.5%. Pissed, right? It's like, yo, you making it too expensive to do business. Drop the interest rates, right? That's how he been, Trump trying to move like the mob, right? So he was already displeased when they made the cut. He was pissed off when they made it because, like, it's not enough, right? And then the next day you see Trump was like, he just spazzed out. Was like, yo, a whole extra 10% on China. Just like, what? Oh, that was crazy because it's like, yo, why would he do that? Like, you have to think, like, why would he do that? Right? Why would he cut those? Why would he add extra tariffs from China? So first of all, he's upset about the whole development with China, with the trade deal not going through. They were almost there. And then China just walked away like, okay, because China ain't going to get pushed around like that. All right. So China, they're masterminds of this whole thing. And so they're going to try to wait it out. And this is what the whole thing is. China's going to try to wait out the trade deal. I don't think we're nowhere close to a trade deal. Trump wants it. We're not close to it because China said, hey, we'll just hold it out. We'll hold it out to see if 2020, if there's going to be a Democrat that's going to win the presidency, because the Democrat is going to just put everything back in place the way it was before. And that's what they're trying to do. They don't want to negotiate with Trump, and Trump is doing everything he can to try to muscle them into a position where, again, negotiations, anytime you negotiate, you're going to negotiate for your edge so you can have an edge. And so that's what Trump is doing. And China just wants the same thing. So you got people bumping heads. Things ain't going right. A part of that, Trump, the last meeting that they had, China agreed to actually buy more stuff from the farmers. And so, but they basically reneging on that. They're not buying the stuff from the farmers. So the farmers are getting hit right now. And so he's doing welfare for the farmers to keep them popping. Okay. Because China not buying it. So anyway, this trade war stuff is major and it's having an impact on the economy. And so you got these two heads over here that's playing chicken with each other. Who's going to fall first, right? And that's pretty much what's happening. There's going to be casualties when you have wars. So that's what's happening. You have industries, businesses that are exposed in China. If you guys looked at we had the sell-off on Friday, you saw like Apple, right? Apple was on the news and everybody saw Apple lost mad money. Well, Apple, they got a lot of exposure over in China. If you got a lot of exposure in China, all right, those tariffs are now going to be on those products like iPhones. They're going to be taxed, all right? Before all those other tariffs, people were not getting hit. This round that he's getting ready to implement on September 1st, it's going to go out to consumers. So retail is getting hit right now. Retail got slaughtered. And I believe OG Ron in the group posted something, I think it was a little week earlier, about shorting retail. And retail, it bounced up, but now it's making that move now. And that's all bought on, thanks to Trump. So, if he was in that kind of position, you could be making money, right? Either way, opportunity, presents itself. And so you got to position yourself to leverage opportunity, whether it's up or down. With options, that's what we do. We have setups for if it goes up, if it goes down, if it goes sideways. We'll go over some of those here in a few moments. So let me actually just take a look here. Oh, and I failed to mention here, but I guess I'll show you guys now. I got some stuff pulled up. Boom. Let's go here. So we had the jobs numbers that were released, and the job numbers. I'll show you this. This is everything that I man. You guys know I put together the data. I run the data myself as a data scientist, a data analyst. I look at the data and I put things together, and we can generate insights from that. So. What we want to take a look here, we can go yellow here. All right, so jobs growth. This were the numbers that were released on Friday. And so this is what the markets were looking at as well. So this is from last month, this here. And the market's like, this is a good number, 164,000 jobs added. Now you got to remember, they always revise the past numbers. They go back and they do these revisions over and over. So when I'm manning the data, I got to keep these things updated because they always revise them. And normally they revise the data down. I haven't seen a time when they revise it up. So again, the numbers they're in because they're due. But next month, when we get the next month numbers, you'll see these numbers will change. You'll say, oh, the printout that you gave us, because again, I sent out the printouts to our members. So if you're not a member, subscribe so you can get that information. I give all those away for free now. So normally when they get these numbers, they print these numbers, the markets behave, and the markets say, oh, yay, we rallied up from 62. I believe this was like 204,000 last month. But then they revised it down to like 193. All right. So we can see from there that we came down here, but it's still kind of up, right? If you see this trend line, jobs is pretty steady, but they're tinkering down. And again, this number is just a number posted now, the 164 that they were happy about. But remember, it's going to get revised next month. So it's 164,000 now. It could be 140,000 next month when they do the revisions. Okay. So this was, something in the markets that moved until Trump, threw out those throwing shots at China out there, throw those tariffs out there. Okay. We also had those unemployment numbers for July. As you guys see, we're at record lows again. It haven't been this low like 50 years or so. And from this low, we're starting to climb back up. So we're climbing back up and we're stalling here. And it's not going to get any lower than this. So we expect the unemployment rates to start to go back up. And then wage growth, as you guys see, your wages are not growing. So that's another issue, because you need people spending money to keep the economy going. All right. Remember, your GDP is growing for you guys spending money, and people need more money to spend more money. So when people got more money, they spend more money. But again, you're not seeing that. You're not seeing that here. Slowing down. This was the GDP numbers we had the week before. It came from 3.1 to 2.3. So we're seeing a slowdown. And they tell you, yeah, we're slowing down. They don't want to create panic to tell you that a recession is coming. But with the yield curve, again here, with this inverting, this is the number one indicator for a recession. Okay, this thing's supposed to look like this. It's supposed to look like that. It's supposed to go up. All right, that lets you know that the economy is healthy, the economy is good. Once it does the reverse, then that means recession coming. This is what we're looking at right now. Weird, ugly recession curve, yield curve, yield curve, you could say, but it's still ugly. So this is the 3 months yield, and this is the 10-year. As you guys can see, that's an issue. All right, so I just want to show you guys that because I wanted to show you those job numbers. I manned the data. I put it all together. Put together the charts. You guys know I'm out here working. Work. Take a look at this too, because we posted some of this in the group. But PMI numbers came out, I think, the week before also. And PMI, again, this is the manufacturers. As they're ordering more supplies, that means that they're selling more. So if you sell more, you need to re-up. It's just kind of like, you going to the re-up, man. You gave you coming back for a bird. Like, okay, I need more. When you get more, that means business is doing good. But if you copping bricks and then you go back to doing O's, he gonna be looking like, yo, what's going on? You ain't selling? Like, what's happening? Right? Same thing here. These are the PMI numbers, right? This is manufacturers purchasing. When they purchase the supplies, you got to purchase supplies so you can manufacture the goods. And what we're seeing is that they're not buying as much. Those numbers are slowing down. All right. And the key number that the economists look at is 50. This is a benchmark. And if you drop beneath 50, then that is going to be like recession indication, right? So pay attention to that. Also, this store closing thing, I don't know if you guys see this. I'll show you this real quick. Let's see if I can get up in there, get up in this data. We'll zoom in on it just a tad bit. But if you take a look at, I put this together. This is actually taking a look at how many stores are being open. If you look at this chart here, store openings and closures. If you take a look at like the little burgundy color right here, this is the Wall Street Jackboyz red. This lets you know how many stores are opening, and then the blue lines let you know how many stores are being closed, how many stores are shutting down, they're closing. All right. And so I update this data by the week, again, 29 weeks in, and you can see what it is that I'm talking about. So if you see, you can notice, you can tell here. Oh, also the dotted lines here, these dotted lines are in comparison to 2018, the year before, just so you can, have something to compare against. So if you take a look at the dotted line here, this 2018, this is how many stores were closed, how many stores closed down last year, 2018. That's the whole year. And you see the little blue lines are peaking up above that right now, and we're only halfway through the year. So we say that the economy is not doing as good as they say, even though the stock market hit new highs. You have to remember that the stock market is not the economy. It's one indicator. We have several that we look at, even though we make our money in the stock market. And I encourage you guys to do so too, because there's so much wealth that's being generated there. And everything got to go back to Wall Street at the end of the day. So anyhow, This is how many stores were closed last year. If you see these little blue spikes, this is where we are now. All right. More stores have closed for 2019 than 2018, and we're only halfway through the year. As this thing continues to slow down, the economy continues to slow down, it's going to be more stores closing. More stores will be closing. And it's a projection of maybe about 12,000 is what we're projecting. Probably about 12,000 stores will be closed by the end of the year. I don't know, but we'll see. But you can already see it's trending there right now. Also, this little green dotted line here lets you know how many stores were open for the whole entire last year. So remember the burgundy lines, if you guys can see those are how many stores are opening this year. So we're almost at the amount of stores that we opened last year, but we still haven't even hit that number yet. So we're opening less stores. Okay. As you guys can see here, we're opening less stores right there. And we're closing down more stores. I think you could kind of do the math. Not many businesses are being created, right? More businesses are being shut down. Okay. This is these are major stores here. And again, if you guys want a copy of this, let me know. I'll get you an update. You know, all the members, you guys should already have this. Well, we sent out the 6 month. Again, we're 7 months in, so some of the data still hasn't came across yet. We're still, as the data gets released, I'll update this often, and we take a look at this. And again, this is pretty much macro view looking stuff. Big picture look. So let's get that up out of here real quick. All right. And then let's take a look here at the handy dandy yield curve, that this is back in play. All right. Remember, I told you guys that the yield curve is the #1 indicator for a recession. All right. A lot of you don't know what that is, but now you know what that is. So if you got some value, give me a thumbs up. All right. Thumbs up in the video. Make sure y'all share this. Very valuable information. But anyhow, this is the yield curve. And you guys can see when we were right here. Again, the whole thing that we're looking at is the 3 month, which is the gray line, the 10-year, which is the blue line. Okay. The gray line is the short term. The blue line is the long term. And it should look like the blue line should be on top of the gray line. Okay. And when they cross over, that's what you have. That's what we call an inversion. Okay. So bingo, that was the first inversion. Got a little chop up in there. And now we're at this super long inversion. All right. Super long inversion. And it was actually getting ready to cross over right here. Getting ready to cross over until last week. We had the Feds do what they're doing, right? And then we had Trump come in and do what he does. And then you see the rates come back and fall, and the spread gets wider. I'm going to give you a different view on this just so you can see it. All right. So these are the numbers, August 2nd. And this is on our website too. It's on the Facebook pages too. You guys can interact with this chart. If you're doing your own research, you can actually interact with this data, and you can go back. I think we got like 30 years of data. You can actually go and take a look at every recession in the past, and you can see how all this stuff looks. I can show you guys, give you a preview so you can see it. But what we're looking at again is that 3 month yield versus that 10-year, excuse me. All right. And basically this is where we are. 2.06, 1.86. As you see, it's clearly under. So that's the inversion. Okay. Remember, you're getting lower money to lend the government, lower yield to lend the government your money for 10 years versus 3 months. That's not how it's supposed to be. So we'll call that an inversion. All right. So anyway, this is actually, again, indication of a recession. When we say a recession is coming, it's not for poops and giggles. It's because we have the data that actually is the most accurate indicator in the whole entire world that predicts recessions. This is what it is. All right. So cool. You guys got that. So now you know where we are in the big view. All right. Let's catch up to today in the stock market world. So again, back to the question when I asked you guys, why in the world would Trump drop 10%, an extra 10% tariff on China immediately after the Feds cut the interest rates? And you guys see how the bond market is reacting. Everything is reacting worse towards what Trump is doing with the tariffs versus the Feds cutting their interest rates. Because this is where I'm going to give you guys my hypothesis, okay? So my hypothesis is this. Trump, remember, he's very displeased with the Feds. He's mad at the Feds because, again, he's like, man, y'all gave Obama 0% interest rates. I can grow this economy if y'all gave me that too, right? But now y'all want to hike it up. Y'all want to do all this quantitative, tightening and all this other stuff, right? And so he's been very displeased with it. But immediately after they cut the rates, he's on Twitter blasting them. Then the next day, he dropped the 10% tariffs, and he knows how this impacts these companies, how it's going to impact Wall Street, right? And so you get that sell-off, and I believe that this is to pressure the Feds into cutting more rates, because one of the things that I don't know if you guys see any of the interviews, go back and watch any interview with Trump talking about the Feds. Just put in on Google or something, Trump Feds, and hear what he says. I was watching an old interview with my wife. I don't know. It was the same day, and it was funny because I went back and I forgot who the person who was interviewing him, but she was just looking like she was instigating the whole call, right? Because Trump is on the call, and she's on TV, and she got him on the phone, and she was like, "Well, Fed Powell said he ain't gonna be punked by you, basically." And Trump was like, oh, he want to play. Oh, he want to be a tough guy. You want to be a tough guy. This is a guy who nobody even knew of until I put him on. I was like, this is so entertaining. I'm telling you, this is a real life TV show, sitcom, whatever you want to call it. I don't know how y'all can watch Netflix and all that when you got real life sitcom right here. This is real life House of Cards, okay? Real life scandal happening right now. Anyway, it was funny because he was just pissed, with Powell, and he want to fire him, but he really can't because the Fed is independent. And so what they do is I think that they're pressuring the Feds to drop those interest rates. We remember we had the same situation back in December when we had that major drop. You guys can see right here, back here, when the Feds raised those interest rates back in October, the markets choked out. And then in December, we had that major move right there. The market sold off. When the markets did that major sold off, right? When the Feds came back for the next rate meetings, they didn't raise no more. They just put it on pause. It was like, hey, okay, we did too much. The markets done sold off like this, right? So the rates just said, the Feds just said, hey, we're just gonna pause, right? We're not gonna do anything, and them not doing anything was actually helpful and beneficial to the market. So you start to see the markets moving, hitting all these new highs, right? All these new highs because they haven't done anything. So it's better that you don't do anything versus raising. But raising, oh no, we can't have that, right? And so they paused, and basically they've been saying that hey, man, Trump is punking the Fed, and Powell's, hey, man, I'm not going to be punked, right? And that's the whole beef with that. And so, anyhow, after they cut, the markets was not happy. Trump was not happy because it was only 25 points. Meanwhile, across the whole world, everybody, like all these other countries, especially Europe, they dragging down the whole markets. America is in a strong position, and that's why Trump is negotiating how he's doing with China. Our economy can withstand all of that, right? But the problem is these European countries, they're terrible. They're in a poop hole right now, okay? And that's negatively impacting on us as well. In fact, I took some notes because when Powell was talking, I was in the middle of doing something, but I wanted to make sure I took a couple of notes, and I saved these for you guys to see because I document all kind of stuff, right? Because Powell was under a lot of pressure because, again, if the market is so strong, you should be raising rates. You shouldn't be cutting rates. And so it's a mystery for everybody, right? And anyhow, check this out. This is what Powell said. And here were some questions that people had for him out there, okay? And he was like, yo, they were serving him in there. Now, he does great. He can talk. He is a good talker. He got a good talk game. He can box with the words. but he was messing up because they was like drilling him, like, you know what I'm saying, grilling him. But this is what he said. He said they're cutting rates because they want some insurance against the downside risk. What downside risk are you talking about? Every week I'm showing you guys this data and I'm telling you, recession, okay? They're trying to land this thing if they can because the recession is on its way. We just looked at the data shows you that recession is on its way. Support inflation to goal of 2%. Remember I told you guys that they need you spending money so they can push this interest rate level up to 2%. And I showed you guys on the charts how that 2% rate has not hit. They're at like 1.5 or something like that. And so they need to kind of get you spending more so they can hit that target. And so they cut the rates so that credit goes into the system, and then the banks advertise to you, and then you go start borrowing money. And when you got more money, you start spending more money. Yes, you participate in this matrix. So that's what I'm trying to show you. This is a matrix. And everything is about influence. You think that you like everything you like, but you actually don't. But they don't force it. They just influence you, okay? But they need you to participate. You got to spend. He also said global trade tension, slow down. These are the reasons why they cut interest rates, okay? So the trade tension, the trade was where it was left off at the same time until after this. Then, you know, Trump said what he said, and then it went down even further, put pressure on the markets. So somebody had asked him, is a quarter point basis going to solve these risks up above? No. The markets know that this shit ain't going to solve it. Okay, so that's why we got this sell off. And then while he was boxing, he came back in with this response here. He said, man, well, the stock market, you know, whatever, right? Stock market, people sell off, you know, the reason why they selling off is BS, right? He said, this is the real reason. He said, demand is weak in manufacturing and investments all around the world. Shit is weak. And this is what they need insurance against, okay? Because demand, remember demand, because your demand is what drives some of these things, right? And so demand is weak. I showed you guys the PMI numbers from the ISM. Manufacturers, they're not reading up with big numbers. They're slowing down. They're not getting much inventory. You need inventory so you need supply so you can manufacture your products. But that's slowing down. So he said demand is weak. That's the reason why, right? And then he also said it's not the start of an easing cycle. Not the start of an easing cycle. This is him saying that don't expect no more rate cuts. That's what he was basically saying. But we all know that's some BS because it always happens the same way. Now, also the IMF, somebody that was in the crowd had mentioned to him that, hey, the IMF says cutting rates only adds more debt to the system. So, like, that's not helpful. And then he goes into this spiel about valuation pressures, household and business borrowing. People are borrowing too much money. Then he goes about leverage and financial stability. A bunch of nonsense, okay? People are spending credit. Credit spends like cash, but it's not because it steals from your future self. And the ability to service that debt is the issue. This is the reason why we have cycles. This is the reason why we have recessions, because you borrow money, okay? And anyhow, this is why we have cycles. So I'm just showing you guys this is what's happening right now. So when you hear them talking about it on the news, you heard it here first. Wallstreet Jackboyz, okay? All right, so cool. With all of that being said, let's go ahead and take a look at the money. All right, let's take a look at the money. This is the S&P 500. The SPX is here. In fact, let me actually pull up the futures. And again, if you guys want the best experience, meaning that you can see the full charts and really interact, join the chat group. Again, if you like what you're seeing, like what you're hearing, make sure you guys hit that share button. Anyhow, this is the S&P 500 right here that we're looking at. Throwing this yellow real quick. All right. So what we basically saw in the market was this double top pattern. For you people that know the setups, again, we teach all of that. That's a double top setup. That's a bearish move, bearish pattern. Now, we saw how in the past the stock struggle at this Fibonacci level here every time it doesn't clear. So we saw all of this last week, and to the point that Trump did what he did. That's the story. to make this move come here. We had the Fibonacci level so we can see the bottom because we need to see the floors so we can get some kind of projection here. But I do want to take a step back first before I go in. So let me go to the weekly. And as I go to weekly, I mean, again, S&P is looking good. It's still, bullish, but we're seeing some weakness. All right, I'm seeing some weakness here. And this is more longer term where we have momentum shifting down. We got the trend coming down a little bit. We got a sell trigger here on a big time schedule. And so I'm believing that we're going to actually go down. We may go sideways to down. But I do know that there's going to be more volatility. And a lot of it is dealing with Trump, the volatility king. So we got this stop here. We got this floor in here. And basically what we want to see is you want to see price stabilize around here or the 100 moving average. So this blue line is a major line, this little blue dotted line. We want to see price stabilize at this line here. If it breaches this Fibonacci target, if it breaches, we want to see it stabilize right here. If it fails to stabilize here, then we're in trouble. It's not going to be good because you're going to get more panic selling. Okay. And so here goes some other levels lying underneath. But normally when we breach these kind of levels, it's going to try to come down to this 200 moving average. So again, we already fell under the 50. We're approaching the 100. And if we, again, this is the 50. We've already broke the 50. We want to see it stabilize above the 100 if the market is going to be positive. But if that breaches, then the risk to the downside is there. Okay, so it's not good. Now, I think the pullback from this week was only about 3% or so. But the Russell was actually showing lots of signs of weakness. Russell's actually in correction mode because it had a 10% drop. And again, the Russell, these are domestic stocks. So this is, here at home, weakness at home. This is what you're looking at. And as you can see, it's got a squeeze on it. And when these squeezes fire, you normally get a big move. The trend is pointing down. Okay, this was the sell trigger there. However, it ran into this floor. And what you want to see, if price may come down some more. We should see it stabilize here. But if it breaks, then I'm looking for more. I'm going to be looking for downside trades. And it'll be in this sector here in the Russell. Okay. And a lot of that is the banks. What I actually see. Let's take a look. Like JP Morgan. Looks all right. Remember, the bonds are going up. Banks are going down. So now we're starting to see that happen. And it's actually kind of looking like a double top, actually. Let's see. Yep. That's a double top, actually. See? And you get that? It's trying to stabilize at the 100. But we get some more weakness, we can be coming down. Just like that. And again, that's JP Morgan. Dove tops, flops. Yeah, I got you on that. Goldman Sachs, same thing. Look at that big spillover. Look at that big spillover. Again, these are the banks. It rose up. They was looking real nice. Looking real nice. Then you got that after the Fed meeting, and then Trump thing. Bingo. Again, you seeing that come down like that. That's falling. We had that buy trigger right there. Seeing momentum starting to come down. We got the trend that's going down also. So those bank stocks are coming down. With the NASDAQ again falling. This is a chart on the NASDAQ. And one of the biggest things here is, again, tech stocks. This is the tech sector. And the thing with these tech stocks is a lot of them got a lot of exposure over in China. And so that's risk there. The sell-off wasn't as bad, but you got to consider a lot of those tech companies. Again, we talked about Apple. Let's just actually take a look at Apple there real quick. As you see how Apple just came down, like, let me just remove that. You saw how Apple was up. Apple was up. And Apple came tumbling, like just drop. That's a gap down. Apple doing a gap down off those tariffs. Because again, iPhones, that's where they made at. They got to come back and sell that. Those things are being taxed. So with those tech stocks, you have to be careful with that kind of risk, especially because they got a lot of exposure over in China. And, you know, you got to keep in mind, like, this is the worst. We coming off the worst week of the whole year. Last week was the worst week of the whole year for the stock market. OK, again, coming off of its best highs, its all-time highs to its worst week, you know, all in the course of 2-3 days. Right. 3 days of information. That's what bring it all down. Let's see here. What else? Oh, the VIX. Show you guys the VIX. When we talked about the VIX, yeah, we talked about the VIX. OG Bridgie, the doc in the group, was talking about how he was long calls. He bought some calls in there on the VIX. And if you buy a call, for those that don't understand options, when you buy a call, you're predicting that stock is going to go up. And as it goes up, you make a whole lot of money. But you only use a small amount of money versus you buying stocks. You just buy one option contract. That option contract control 100 shares of stock. But anyhow, just think about it this way. You take a small amount of capital and it grows as that stock goes up, like astronomical, like exponentially. So this is why we trade options. It's beautiful. But anyway, this is a chart that we was actually showing you guys with my Fibonacci levels. I believe Mark, he's not here. He called me the Fibonacci king. But y'all don't understand. I gave up on the Fibonacci at one point in time in my life. I had to talk to my mentor. She's a Fib queen. She's a Fibonacci queen. I was like, hey, I don't understand this stuff. And now I'm tickled by myself as I do pretty well. I'm a beast. But as you see, this extension here, this is the floors. We were eyeing this floor. And we was having a little joke in our group on Facebook. Was like, because Bridgie's like, I got those long calls waiting for them to pop. I was like, hey, man, the VIX is dead. They need to wake up, right? So when we say the VIX is dead, meaning that, you know, complacency sets in, equities go up, stocks go up because there's no fear in the market. This is the fear indicator. If you guys don't know about the VIX, this is the fear indicator, okay? That lets you know fear is in the market, okay? When fear is in the market, when that goes up, stocks go down, okay? So if stocks go down, you can make money by buying this because that's going to go up. This is the VIX. So anyhow, we had these floors mapped out here. Clearly, you guys see that those floors have held, you know, very responsibly there. And so we're looking at it. We had a squeeze that jumped on it. Again, it's from last Game Plan Sunday. We had the squeeze that was showing in there. So it was like, hey, we got a squeeze set up. You guys know we have a certain strategy that we're actually eyeing when we're making our plays that I teach. Okay, so that squeeze is in there, and we're like, hey, that squeeze got a fire. It can't go no lower than this, right? But we don't know the story. We don't know what's going to make it happen. We don't know the catalyst, right? But we can see in the past that the markets don't breach that floor. It holds, and it holds until it breaks, right? But this is a low that we're eyeing. So the expectation that this is going to go up, we don't know the story or the catalyst. It just so happened to be, you know, the Fed's cut rates. That was already baked in. But Trump with the tariff thing, that wasn't baked in. And so you got fear came into the markets. And then we had that buy trigger say, hey, get in. Boom. Shoot off like a rocket. After the red, you get the green. Those green dots are fired. That's letting us know that it's firing along in that direction. Let me actually go in onto a more intraday chart. Just take a look at it. And this is actually looking like a double bottom pattern. You see that, Topaz? Look at that. Look up, look up, look up. Bow. So there you go. So that's interesting. So again, you had that pop off, and the VIX was at these lows, and now we're where it should be. Okay. Um, we know our Fibonacci levels hold true because we see it's behaving towards the levels now. So as it hit through those tops, it's coming back down. It may take a breather here. We are getting some triggers here that should come down. It's overbought. It's overbought. How much will it come down? I'm not too sure, but it just depends on how the rest of the events turn out. Because again, you got Trump throwing off tariffs, and then you have China that may say, "Hey, we're going to retaliate," and then I could see this turning around and going even higher. Okay, so these are things that could be happening this week. And so let me show you some targets that I got up ahead here on the VIX, where this thing could go. So again, you're looking at about, from here, I think it may come sideways a little bit, may do some kind of flag kind of move here, and we can see it go even higher. 22. This is where probably should be. So we'll see how that goes this week. Again, that's my intraday chart. If you look back in the past, it spiked up here around 23, 44, somewhere around here, but it can go even higher, 24, 25. Who knows? It can blow through these levels as things get really heated. But keep your eyes on the fear indicator, the VIX. As that goes up, equities go down, bonds go up. Somebody's asking, why would you do bonds? Hey, bonds go up when the stocks go down. So we've been seeing bonds go up. We had a squeeze on bonds also. There you go. This was bonds, okay? Bonds was in a squeeze setup. Again, we have our squeeze. Had a squeeze set up, and then it fired long, fire, okay? Trend was up, momentum rebound, okay? We had a buy trigger that says, hey, get in here. Boom, it respects our Fibonacci targets. Again, I teach you guys the Fibonacci. You learn how to use it. It does take time. It's not going to happen overnight, but you do have mentors in the group that can help you to understand it, and you have myself that can help you to understand, because some of it is a little abstract. But I try my best to give you some definitive information on how to use this so that it works like this. But you see it starting to behaving towards this, and bonds can continue to go up. All right. So again, if you want some exposure in bonds, and we just looked at those treasury yields. Remember, when price on bonds go up, price goes up, the yields go down. We got a whole class on this. All right. Price is going up. Yields are falling. Yields are falling. Like, I think it's like 7-year lows. It's crazy. They're falling. And that's that yield curve inversion that we're talking about. But again, TLT, this would be the ETF that you'll play if you want some exposure in bonds. Another flight to safety. Again, flight to safety, we talk about bonds. And then we also talk about utilities. So utilities is another flight to safety. Look at here, look at here. Look at what we got here. We got a squeeze in place here on utilities. Squeeze here. We see the shift in momentum coming up. There is a buy trigger here. And my trend isn't working with us here. I don't have any other triggers, but I do have enough information that I may want to risk some capital here to the upside. I do see a particular pattern that's forming here. Looks like the rest. Looks like this could be a double bottom with that squeeze in there that'll give it fire when it explodes, okay? To push it up higher. So again, this is the utility sector. If there's more fear that's going to pop into the markets, then this is going to go up. More fear, flight to safety. One of the particular stocks that's in this one here is Nextera. We got Nextera Energy here that does have a squeeze. So we're looking at a squeeze within a squeeze. Okay, squeeze within a squeeze. So this could pop off at any given time here. but I don't see much movement coming out of it. Again, these really don't move that much, but when it moves, should move. There's a buy trigger here. Got some targets up ahead. It's at 211 now, so he's talking about 214, 216, second target, but somewhere around 215. You can see this is where the stock trading at right now. So that can give you some exposure there. If you want some exposure in utilities, then that's how you'll play that. I also took a look at some stocks here. I'll take some from you guys in a few. I was taking a look at some stocks that were not really, impacted negatively by all the sell-off, because all the sectors are pretty much sold off except for consumer staples and real estate. So real estate actually did good, but everything else has been selling off. So I'm just trying to, okay, let me see if I can find something that's not negatively impacted by the sell-offs, okay? And you guys can look at this, AMT. This is one of our 5G stocks from our 5G newsletter and blog. So again, if you're on our website at wallstreetjackboyz.com, check out the blogs, get that free information, stock list, watch list, and all of that. But this is one of those stocks that's on here. And this has a squeeze that just fired off. Okay, their fundamentals are actually really good. Okay, fundamentals are in play, and then the technicals are intact. All right, the stock is trading well above all of its moving averages, and we also had a buy trigger here. It's also finally made its way above the 618 retracement on the Fibonacci. Okay, and here's another one here. They did a good earnings, and the projection here is that this should go north. It didn't sell off. You see how it did so well? It did so well during the sell-off. Look at it. It moved up. Everything else is selling off. So if it's doing good in the bad times, when the times are good, bingo. So I like that to the long side, AMT, this week. Here's another one. Team TAM, squeeze setup. You can squeeze some moves out of here. Squeeze in place. Trend is intact. Momentum is sideways, but we got buy trigger here. Okay, we caught a buy trigger here. It got stopped out, but then it's coming back up to test again. It's on its floor, so it just reverted to the mean. All right, but with that squeeze in there, it fires long, and we should see it hit, around at least 150, somewhere around there. So I do like that to the long side as well. What else? Mickey D's. Vicks need a rub down. You crazy Topaz. Vicks need a rub down. Vapor Vicks. People think we talking about Vicks Vapor Rub, huh? Now we talking about that fear indicator. All right. Let's see. Yes, Cynthia. Again, I asked that you join the chat. The link is in the post itself to get the best experience. Again, streaming on the Facebook side, and the way they got it configured, you can't see like the whole charts and all of that. But if you want to get that best experience, I do recommend you to join in the chat where you see everybody else over here, they comment and stuff. You can see all of that. But Mickey D's, McDonald's, this was something that was interesting too. And I can't even remember the last time I've been to McDonald's. Chick-fil-A, they be getting all my money. But you got to think, if there's a downturn, Chick-fil-A a little pricey, man. I got a family, so when I'm at Chick-fil-A, that's a $50 meal. You feel me? But you can go to Mickey D's and make it a $20 meal. And so in a recession and a downturn, Mickey D's do well because people spend more money there. They're trying to save money. Okay, they're not, they're not buying Ruth's Chris steaks. They're eating at McDonald's hamburgers and hot dogs. It's a recession. Okay, so don't know if the move is going to happen now, but this is what we see. The stock looks beautiful. It's trading well above all of its moving averages. It's been doing really good. It is getting away from its moving averages, but it had a little pullback to about the 50 moving average here. What I see here, why I like this stock, is because this is interesting. Let me just take you back. I'm going to take you back in time because this is interesting. I didn't really realize this until I looked at it. But we go back in time. If you go back to their earnings report, okay, so they beat that earnings. That was good. But all of these earnings, they have not been beating their earnings. They've been actually missing earnings. They missed earnings here. And they had a small sell-off. It wasn't actually big. I mean, it came beneath the 100, but it stayed. And it came back up. And then here, it missed earnings. And then, let me see. Go back further. But I don't know. I just been noticing that when McDonald's missed their earnings, they're not really impacted by it. For some odd reason, they miss earnings, and the freaking stock continues to go up. I just think that's interesting. I don't know if you guys notice that now. Stock is going up, and they're not hitting the numbers. And so they just had earnings. They just had earnings here. Let's see if I can get that. Come on, come on. All right. They missed earnings again. Okay, so they just had their earnings on the end of July, the 26th. They missed earnings and they only sold off about this much. This is not even bad. Like from that, they hit a new high right before and it came down here and they're already bouncing back. And they actually had their bounce back on Friday when the markets was selling off. I thought this was really interesting. Okay, McDonald's is doing its own thing. Market selling off, McDonald's going up. It is at this 618 retracement, but we cleared that. We have a squeeze this in formation. I got to shift the momentum that's coming up. I don't have any triggers just yet. So I will be waiting to see if we get a trigger. And that trigger would be across above. Okay. That, or if my radiating fire gives me a fire sign here. We get the trend that starts to come back up or whatever. We take a look at all those signs as a trigger to enter. I like to enter that to the long side there. All right. So cool. That's what I got for you guys for this week here. I'll take a look at some plays from you guys. What's up? Crunkville? Patrick, what's good? Ron B in the building. Richard, what's good? LaWanda, what's happening? Demeter, Charles, Sade, Sim, Irv, what's good? Irv? All right, my man. Deranged in the building. Okay, cool. Terry, Tarondas, what's good? All right. You guys got any setups that y'all want to look at? I'll take a look at a couple of those from you guys real quick. And then we'll go ahead and bring the session to a close. If you guys like what you saw, definitely share the video. Subscribe, actually. Make sure you subscribe to the email list. It's free. I release articles. We do a lot of extensive research, trade stocks and stuff like that. Again, join the group on Facebook. It's free as well. If you do want to learn our strategy, how to make money in the markets, sign up for the courses at wallstreetjackboyz.com. If not for anything, join us, in the group for free. Come along for the ride to see how we do it in real life. PC, CNXN, GFI. All right. My man said he wants to see GFI. What is this? What is this? This is a penny stock. Goldfields. What is a gold stock, huh? All right. Again, this stock is in an interesting position. Again, it's for stock play. We trade options. It's only $5. So if you're going to do a $5 stock, then you just buy the stock itself. But where it's at now, it is extended. It's going into a squeeze. Right now would not be a place to enter just yet. It could be coming up on a list here, but the setup isn't clear. It's not a clear setup here. We don't have the trend participating. Momentum is not participating just yet. We do have a squeeze that's coming into place here. It did hit this 50. What you want to do is monitor this 50 moving average to see if it's going to hold here. There was a sell trigger here, but it's kind of reversing up out of it. So again, this is a wait and see thing. See if it's going to come down, see if it's going to come up. it's a little extended anyway. I don't think it's really going to move too much. But, you know, again, I'm not a penny stock trader, so it's already extended like it's a little overpriced. Stock normally trades around here. Looks like it's already made its move from $3. That's a big move in 2 months. That's a big move. So like it need to breathe, it need to come down some. Now, if you can catch it to around here to about the 100 moving average, that's a better, you know, entry point or something like that. Oh, Topaz says, you know, them pennies. That's right. Yeah. Them pennies you got to catch. You got to be up in the morning, man. You got to get your pre-scan together. You know, you got to be up early. You got to work those. If you don't have the time to schedule to work those, and you don't need to play with those, it is money to be made there. You got to be ready for it. Ooh, look at this one. Okay, Topaz, this was an earnings play. Let's see what they do. August 1st. Oh, they don't want to give me no information. Okay. They want to be stingy. Obviously, it was something good that happened. Obviously, it was something good that took place here on this stock. On earnings. So this is an earnings play here. Do they even trade options on this? Let me see. A little light. They're light on the option side, so I don't have anything for that one. But that was a big earnings play. That was a jackpot move right there. August 1st. Yeah, I don't see anything though. They're not showing what they printed for earnings. Obviously, they beat though. Yeah, you have to check the news. You guys can go to like Seeking Alpha is a good place. If you're a fundamental stock trader, if you're into fundamentals, buying stock, buying and holding, that's a good place. So you can pull the transcripts from earnings, or you can just go straight to the SEC yourself and pull those reports. If you're an analyst, you can do that, right? If you know how to read those, then that's a good place to go. You go straight to Edgar. What else? Anybody got anything that's options worthy? Check the news. Any questions? Anybody got any questions that I can take care of before we bring it to a close? What's Pinterest ticker? Is it pins? Pins. There we go. Pinterest. Yo, how many of y'all got Pinterest accounts? If you got a Pinterest account, when you go to our website, you know, all the images there, you can save to your Pinterest account. So I do encourage you guys to do that as well. But let's see. They just had the earnings. Okay. So negative 0.06. So they did a little better than before. That's why it jumped up the way it did. Yeah. I see. They sold off in here. Look like they're making some improvements. So buying up there. It's still such a baby. We don't have any patterns to predict on us. They don't have a history. So these new playboys like Beyond Meats, it's out of this world. It's crazy. Probably should go and trade some Bitcoin if you're going to be doing all that. Yeah, that gap. Yeah, that gap is crazy. There you go. Feel on the downside. Yeah. Yeah, I mean, again, this is up there. It's again chasing the overbought territory. We'll see how it go. All right, you guys a little quiet tonight, man. You guys a little quiet tonight. I see. I guess you must be full. You must be fed. You got enough information. It's a lot to digest. Okay, so that's cool. I guess what to keep in mind this week, we have earnings for Disney on Tuesday. Disney earnings on Tuesday. We may get some sell off some more. Like the futures right now still selling off. As you guys can see right now, markets are down right now. I don't know if you can see that, but take it over here. Markets are down right now. So again, we may see some more red in the play. Gold is up. You see gold is coming up. Bonds is still up. VIX is up. All right. So again, that VIX, that's that fear. So people start to go to safety. But the markets are still down. So again, we may see a more red day tomorrow. Tuesday, you got Disney reporting earnings, which I think Disney is going to beat earnings. And they have, the Lion King movie. Sure, they sold a brick load. And yeah, they got some room. They got some room to the upside. They're not overextended, so they can come hold at the 50. Here, you may see a rally back up. CVS, Duke Energy. This is a video game week too. So tomorrow is Take-Two Interactive. We talked about that stock, I believe, was the week before or last week. Take-Two Interactive. That's the company that owns Fortnite. So you kids playing Fortnite, having to, trade that, get their money back from the V-Bucks. You got Activision Blizzard on Thursday, and then you got Electronic Arts on Thursday as well. So video game stocks this week coming up. Other than that, shouldn't be, it's not much heavy data information. We do got some PMI information, I think, on the service side. But as far as economic information, this should be pretty light. With that being said, I'm going to go ahead and bring the session to a close. Definitely want to thank you guys for joining us, and we'll see you back here next week on Sunday. Peace.